So then all of a sudden the buyer pool looks at all these and now they
have
provided more.
options.
They have options.
A little bit more confidence.
Yeah, and with the interest rates going up, a lot of these buyers may also decide not to move forward so that they can figure out what their interest rate is. Because right now that they increased the rate, if they had a pre-approval fixed, if it was fixed, then they know what it was. If it was variable, they got to go back and see, okay, what's going on with their situation. Hi everyone, and welcome to Reality Check, where we discuss what's happening in Toronto's real estate market, hopefully where it's going, and help you make informed decision buying and selling real estate. So, we are in June.
We've stopped introducing ourselves.
Yeah,
this is Nima, I'm Devini.
Prof. Devi, that's what we call you going forward.
Okay.
So, what we're gonna talk about is what's been going on, because right now we're in June, and for the first 5 months of the year, we've had an interesting run. And as I kind of predicted, the prices went up. Interest rates just happened. I mean, that's back up again. I don't know how that's gonna affect the price, but we're gonna find that out later in the segment.
Yeah.
So should we get into it, see what's going on?
Let's get into it, our favorite chart.
Well,
no, that's the dot chart.
That's the dot chart.
This is not the dot chart.
This is not the dot chart. We're gonna start off with Market Watch. So we'll see what's going on. So the prices have gone up. I mean, we said it.
Surprise.
Back in January, the prices were gonna go up, and there were reasons behind it. I mean, we got the immigration. People knew interest rate hikes were gonna level off, but I mean, inflation creeped up again. So to get that in control, right now we have another 0.25 hike in the interest. But with that being said, for the last 5 months, everything was on a hold, and that led to the prices going up. So back in January, the average price was hovering at around $1,039,000. Now we're at 1.2 million, to be exact, 1,196,000. That's a huge jump. I mean, no one saw that coming. I didn't think it was going to go up that high.
I actually did.
Did you?
I did.
You thought it was going to hit 1.2?
No, I didn't predict the number specifically, but I did think we were going to hit like that 2021 COVID pricing again.
I think we talked about it.
I really felt confident that was going to happen.
And the reason for it was there was nothing on the market, and the good properties, even back in January and February, were still selling pretty quickly. If you were priced right, you would sell pretty quick. I mean, we had our listing back in Mississauga, which we didn't think it was gonna sell for the price it sold.
Yeah.
There was no offer date. We ended up getting like 70,000-80,000 over our ask.
Yeah.
And well over what the actual value.
Which we'll see how crazy Mississauga is also performing right now. And this was like 2 months ago.
We should start predicting stuff. I think
I'm a bit of a witch. Like that was a hunch that prices were gonna go up, by the way, guys. It wasn't like, oh, I thought, based on history. I was just like, I feel like.
Oh, that was just a feeling?
That was.
So all the analytics I'm doing down here.
It's useless.
It's useless. Okay, good. I think, Nick, we got the crystal ball. I think it came in finally. Finally. So anyone wants to know what's going on in the next couple of months, let me know. So let's go. So $1,196,000 for average price. What's interesting is that the active listing is actually going up.
Yeah.
Reason for that, I believe, is people are seeing prices are going up, and they see their neighbors getting 10 offers, and they're like, you know what?
They're getting a little bit more comfortable.
For the last 12 months, probably the best time to be selling. Mm-hmm. And if they've been watching Reality Check, I've been saying July and August will be probably slow. I mean, like that's what I'm guessing.
I think so too.
People are going to be away. So right now
us.
Well, clearly you will be away.
No.
So 12,000 almost active listings, and the sales went up pretty drastically. So we're at 9,000. So I want to just go through how the sale increased. So we started at 3,100 back in January per month. It went up to 47, went up to 69, went up to 7,500. Now we're at 9,000 sales. So the sales are picking, and the reason for that is there is more inventory to choose from.
Yeah, and if you look, as I was reading something the other day, from last May to this May, we only had 65,000 transactions total for the GTA.
That is
which is not a lot. It's actually down.
Well, it's bummer. It's bummer. Like 12 months rolling average is 65.
Yeah, which is down, I think, 50% for the 20-year historical average. That's quite significant. Nuts. And these is fact numbers. I know you're looking at me like, are you sure?
No, I know. I was just thinking about how many agents we have. We have We have what, about 80,000 agents,
Yeah.
82,000 agents, and we got
Not
65,000.
so many good agents, but
Not so many good agents, but we got 65,000 transactions, no, 65,000 sales.
65,000 transactions total. So sales, purchases, transactions.
That's
Yeah.
craziness.
And now
Well,
we're at 9,000.
So you're telling me that's less than a sale per agent.
Oh, that's what you were
Well,
getting at.
Yeah, I was like looking at it, I'm like, oh my God, that is awful. Well, thank God we sold a couple. But anyways, going into the days on the market is falling down as expected because
Yeah.
things are selling faster, prices are going up. Again, this is due to the lack of inventory. The demand has risen and not so much inventory. And because of that, people are jumping at deals that they see. So at the peak, we had about 29 days on the market. Now we're at 14 days on the market, exactly less than half of what it was.
It really feels that way too.
Because majority of the homes, if they're priced right, they will sell within the first 7 to 10 days to begin with. And if something, in my opinion, sitting over 3 weeks,
Price adjustment if you're on the listing side, but if you're on the buying side, you got to be targeting. Opportunity.
Yeah. So let's talk about the opportunities. If you see in this market, there's a listing that's sitting over 3 weeks, 21 days, or if it's over 30 days, I think that's where you should try to focus to get a deal. Because
if you're price sensitive, if you have that tight budget and you don't want to be in a multiple offer situation, which we are very much in right now still, those are really the
But there are people that don't want to still compete because they're not in a rush. So for my clients, I target properties that are over 21 days. And
you target? You're a hunter.
Deal hunters. So going back to last train of thoughts. Okay, months of inventory. That's the other thing I wanted to talk about. So in the last 12 months, we've had the lowest number of inventory right now, and the months of inventory right now it's at its lowest at 1.32. There are regions right now that are.
You said we had the lowest month of inventory. What are you looking at? Because I'm looking at active listings
here. No, we're looking at 1.32.
Okay, months of inventory, because active listings is 11,000, which is up.
Yeah, active listing is up, but the sales are also up. So that brings down the month of inventory to 1.32. Just
want to make sure that people understood that that's what you're trying to convey.
So I mean, like, again, right now, hopefully Nick is showing our chart. We're at 1.32 months of inventory. We're gonna go at see each region. A lot of regions like Durham, they're under 1 month of inventory, and
which is insane.
Yeah, there is. I was actually looking for the last week. A lot of areas in Peel region and Durham, there is almost no inventory, and everything comes with an offer date. So there aren't much choices out there. So if you are in the market, you got to compete. So you got to make sure. I mean, we've had the strategies we talked about.
I'm seeing even in the $2 million price range right now, they're doing offer presentations.
Depends.
Which is
depending on the location. Yeah. So I mean, Toronto prices, especially detached, jumped up. We're gonna talk about it, but right now because the inventory is pretty scarce, we're gonna run into these stuff. But with that being said, in June right now, what I'm seeing is there's a lot of inventories coming up, and as of now, that the interest rate.
When he says a lot, he just means
more than normal.
More than what we're used to. Not that there's so much inventory.
There's not a lot.
The way you're saying
like
it, it's like everybody's
There's more
sale.
coming. There's more hope on the horizon. With that, but in the last in June right now, with the interest rates going up, I'm pretty sure people are gonna try and take advantage of these prices that have gone up. So more homes hopefully will be on the market, and that will reduce the number of offer nights that people are gonna run into.
I'm thinking also, like, maybe, I don't know if you're from this train of thought or not, because literally it just happened this morning, the interest rate hike, so you and I didn't really have a time to chat at all, but I feel like
I don't like the topic of interest, but
I know, but I'm wondering if in the next 2-3 weeks we're gonna get a little bit of apprehension from clients again.
So exactly my thoughts. So that's what I want to also discuss. So with the interest rates right now going up, definitely there's gonna be a
little holdback.
Yeah, holdback for the next few weeks. A lot of people are gonna play that wait and see game and may not attend a lot of these offer nights. So that's what I was getting into. So for the first week of June, there was a lot of chatter about interest rates going up, and because of that,
I didn't think they were gonna.
I was I should have done another prediction,
Yes,
but like
you
that was
should've.
80% of, like I don't know, like when they come out and say, okay, the inflation has gone up,
You're
they're
like,
waiting
okay,
for that.
here we go.
Yeah, but what I noticed in the first week of June, when there was all the chatter, was that a lot of properties that had offer nights, mostly in York region, and I saw some in Oakville and Mississauga. On the offer night, they either did not get any offers or they got only a few, and they didn't end up selling because the seller expectations right now have gone up again because they see,
Their
a few weeks
neighbor
ago,
and
everyone's getting like 15, 20
news.
offers. Now all of a sudden they got 5 offers. Things don't go as planned, but instead of selling, so they hold back, they raise the price or they go with some strategy. So a lot of them didn't sell. So those
When you say raise the price again, I just want to make sure people get it. They do the price adjustment to what it was actually valued at, not the suggested listing price, which is a marketing price.
Yeah. So let's talk about So when anyone is doing an offer night, they go in with a price that is below the actual value,
Which is
called
price.
marketing price. So the marketing price being 5, 10, 15, 20% lower doesn't really say anything. That is to grab the attention of, I would say, uneducated buyer. Because if you know what the value.
I like that.
Good, we got to coin that. So that they come, put in an offer on it and see what, if they can get it. A lot of people will come in or around that marketing price, which is unfortunate because they only gonna drive up the price.
We talked about that last.
Yeah, and if that property doesn't sell, the agent will increase the price to what they think the value is. So you will see a house on the market for 7 days. It doesn't sell the next day. It's, I don't know, 20,000 more.
At a higher price, it's just adjusted.
Yeah. So there is a lot of this happening in the last 7 days that I noticed, especially in the York region. So let's assume in this pocket that I was looking, there was about 12 that did not sell and they were there. There's more listings coming on the market. There was another like 15 that was added. So now all of a sudden you got 27 properties to choose from. So then all of a sudden the buyer pool looks at all these and now they have options.
A little bit more confidence.
Yeah. And with the interest rates going up, a lot of these buyers may also decide not to move forward so that they can figure out what their interest rate is. Because right now that they increased the rate, if they had a pre-approval fixed, if it was fixed, then they know what it was. If it was variable, they got to go back and see, okay, what's going on with their situation. Or if they haven't got a rate commitment, then they got to go back and see. So there is going to be a period of, I would say, like for the rest of the June, I think things are going to be a little bit slower. Going into July and August, I don't foresee we're going to have the hike that we had so far. But
I agree.
Yeah, so let's talk about the fact that some of the areas are outperforming other areas. What do you think? You want to talk about the average?
Favorite.
You want to go to the dot chart? You want to talk about the average prices?
So the dot chart and this chart are my favorite charts.
Yeah.
I love a good side by side. Percent change is great, but dollar for me is like.
So what I want to show is again the dot chart. So in January we see the lowest.
I can't see that. Sorry, gotta make it a little bigger.
Oh, okay. There you go.
For the people.
So there you go. So we got in January we got the lowest price at $1,039,000, but you can see how quickly it jumps in February, and right now we've been going up each month. How far can it go? No one knows, but realistically, I don't see us right now hitting the 1.33 that we hit last year as a peak.
I think it's just a consistent price growth.
Yeah.
And as Chris Slidham always says, if you really look at the beginning of the chart and the tail end of the chart, it's really going in the direction it's supposed to.
Yeah. So I mean, like if you normalize it, you draw a line in the middle.
Yeah.
You will see that 7% average price growth over the last 20 years, you will have that here. So again, probably for the next couple of months, I think things are going to flatline a little bit. I don't see us going drastically over 1.2 million, but we'll see that next month. Let's go to the average prices for each region because that's very interesting. We want to see how far we've come in each region overall. So
GTA
overall, since January has gone up by about 15%. So average price in GTA was $1,038,000, right now 1.196, 15% increase over 5 months.
Makes a difference.
3% per month. That's a lot of increase. Toronto had 21% increase. Again, average price in Toronto in January was really low. Reason being, majority of the properties that were exchanging hands were on the lower end of it. Condos, townhomes. The higher end was not moving. Right now, the higher end items are moving, and we are gonna see that in the detached numbers that I'm gonna show next. So Toronto was 21%. York region only went up 7%. The craziest increase was in Mississauga. So from January till end of May, 24% increase over 5 months. That's almost 5% per month increase. And going to Oakville, 13%. Durham, 11%.
So I just want to pause you a sec because people can really have a look at this and understand this little quick concept. If you can see, things that are higher value tend to creep up in price a little bit more conservatively. Like here, if you see here in like York, right?
Yeah.
The lowest percent change.
Yeah.
And things that are more affordable tend to be a little bit more volatile for some reason.
Yeah.
So just keep that in mind. Sometimes spending a little more or a lot more can really take you through the test of time when volatile times are happening.
Exactly. Yeah. No, that's and Toronto
Just
is
a little.
Toronto was a good example because when the prices dropped, things picked up.
Significantly,
Yeah.
yeah.
But also keep in mind what the numbers we're seeing here are an aggregate number of all types of housing,
Yeah.
condos to detached. So we're
Yeah,
not
yeah.
talking about each type.
No, that's why I
Yeah.
wanted to say that value, not really unit type.
So if we go, and actually, like one thing I really wanted to pay attention to is right now was the detached prices in Toronto.
Insanity.
Yeah, so month over month from April to May went up by 7%. So, I mean, just to put that in a dollar figure, we were at $1,787,000 for an average price of a detached in Toronto. Right now, we're at over $1,913,000.
And for a lot of people, that would mean you got priced out of what you were looking for.
Yeah, $1,913,000 for an average detached. Wow. A lot of
that's
areas,
large.
by the way, are higher than that. Like, I mean, like if you're looking at central Toronto, like Lawrence Park, Baby York Mills, Don Mills, Leaside, your average price in most of these areas are hovering well over $2.5 million. But again,
It's
who
one of the
cares about
reasons why I
Leaside?
moved to Toronto, I have to say.
Oh, talking about Leaside, by the way, there's a good condo coming up in Leaside. It's called the Leaside. And
The what?
It's called the Leaside.
The Leaside?
Yeah, and there are going to be some good investment opportunities there because of the lack of condos overall in Leaside to begin with. This is a boutique condo. It's going to be 8 stories. The first building is going to be about 107 units, and the average price probably hovering around $1,500. So if anyone's looking for a condo in Leaside,
Yeah.
definitely take a look at that.
And pre-con too is just happening right now,
Yeah, pre-con is picking up as well.
which
So-
was really down last year.
Yeah.
So
And
things
again,
are happening
rightfully
there.
so, because the price gap between the pre-con prices and the resale had widened. But right now, with prices rising, it makes sense, and they got some good
100%.
incentives. A lot of
really
condos
good
right now,
incentives with the 10%, the 15%.
either 10% deposit or 15% over 3 years. So if you want to invest in something that you don't have to
Long-term.
pay, get a mortgage right away, that would be a good opportunity. Let's go into the news. Let's
Can
talk
you
about.
plug the pre-construction segment down here so that people can understand
Yeah.
how to purchase pre-construction
Yeah.
and what you just said what that all means? Because we gave a snippet
Nick,
and people
can
are
we
going to be...
put a little one of those little things down there?
And link.
Yeah,
Thank
so we're
you.
gonna have the link somewhere down there.
Yeah.
We're gonna also put it in the description as well. Definitely, if you haven't purchased pre-construction, make sure to click it there. Click it there. Click that
it.
link.
that
Because
link.
we discussed how
How to purchase.
from
From,
pre-con from A to Z, like
Yeah.
for beginners. Okay, so let's go to the news. So interest rates, they went
We're
up.
already at the news?
Yeah.
Oh, wow, okay.
Yeah, we're already there. We're 23 minutes so far. So we're in. So in the news, 25% rate hike.
Yeah.
That was crazy, and Did I say 25%?
You said 25%.
No,
25 basis points.
25 basis point. What am I saying?
I should have corrected you.
Okay, let's go back.
Like I usually do.
25 basis points. Anyways, 25 basis point increase in the rates. Nick, we don't even need to cut that out. What's going to happen with the prices? We will know in next month, hopefully, but things will probably slow down. But again,
soften a little.
Soften a little, and I hope so, because it's been crazy. There's not much inventory out there. We got a lot of clients right now that is tough to go and find a property for, because things are, again, starting to sell for crazy prices. One thing that came up in the news that grabbed a lot of attention was something they talked about was that more than half of GTA condo investors are losing money on properties. And they go on saying, a new report says for the first time ever, more than half of newly completed condo investors in Greater Toronto area were losing money on the rental properties last year. And
well, the cost of borrowing was still really high. So
well, yeah.
That's a big one.
So cost of borrowing is high, but what they really don't talk about is how much are they putting down, because that really determines if your cash flow negative or positive. So I mean, these headlines, what do we call them? Clickbaits. Yeah. It doesn't really tell the whole picture, and this
it doesn't really paint the whole picture.
Doesn't paint the whole picture, right? Yeah. Anyways.
No, it doesn't. So what people don't realize is traditionally you have a 20% down payment that you're putting towards the purchase price, and then 80% of that represents the mortgage that you're taking. There's obviously costs. You have your principal, you have your interest, you have your maintenance fees, you have the insurance portions, etc. Nima, take us through the rest. Yeah,
so I mean, right now at the rate that's being offered on most mortgages, at a $550,000 condo, let's just say, your monthly payment is just going to be over $2,500, and its principal and interest is going to be almost 50-50.
And now you're charging about $2,500 for rent.
For rent,
so right now we're
so at 20%, you're like, your mortgage probably is going to be covered by the rent. What is not going to be covered is your property taxes and your maintenance fee. You want those things covered? This is what we've been telling all our clients anyways. I mean, if you're putting down 20%, you cannot expect to be cash flow positive. You're going to be, most of the time, at around 35%. So if you're 35%, most likely 35% down payment or higher.
Even higher, because it was
on the
35% also when interest rates were at like that 2%.
And right now probably higher. Right now probably higher. So you got to put down 35% to 40% to be either neutral or positive. So again,
but keep in mind, guys, you're paying down some of your principal, so you're building equity in the property, and that is the important thing. In addition to that, that property is appreciating, so you got to consider it like it's a forced savings.
So let's just go through the exact example we're talking about. So you're getting $2,500 rent, you're paying $2,500 almost mortgage.
And this is a one-bedroom.
And this is a one-bedroom in downtown Toronto. Your maintenance fee is gonna be somewhere around $370 to $400. Let's call it $400 for maintenance fee. You're gonna have another $400 of property taxes. So $800 you're gonna be negative per month plus your insurance cost. So let's just call it I don't know, $900 to $1,000. But with that being said, you still have $1,250. That was your principal. That could cover all that and more. So whatever you're paying out of pocket, look at it as it's going towards your principal. Forced saving. It's going to be saved in your.
You're building equity. Yeah. You're paying off your equity.
That's exactly what it is, and you're going to have access to it once you sell the property.
Or again, refinance and pull it out. And,
once the property goes up in the value, you can do that as well. Yeah. But think about the fact that if you're going to be cash flow negative, how that's going to impact your life. So if being negative about $700, $800, $1,000 a month is going to affect your life, then you shouldn't be looking at that, or you should be putting down more down payment. Or there are other options. You don't have to buy in Toronto. You can buy in Hamilton. You can buy a much cheaper condo and still get
more affordable. I don't like cheaper.
Much more affordable. Yeah, she's right. And get a pretty good rent there. That will cover it. Or even Barrie. Barrie's got some good rents as well. So there are options there. So you got to see what's important to you: capital appreciation or the cash flow.
And a lot of first-time home investors, or first-time investors, I should say, don't understand that. They're expecting that majority of other investors have purchased their real estate and are just cash flow positive right off the bat. And that so
Never
could not
happens.
be the case. And I don't know what
be honest, it
investors
hasn't
selling
happened.
you this idea.
Like I've been renting out my own properties since day one. Never, probably back in 2007 it happened that my condo was cash flow neutral at 20%, but anyone that buys a property, especially with 20, even 30%, the first couple of years, you're gonna be negative, but once you become cash flow positive and then look at the equity you've built and the capital appreciation, you're gonna love it.
Yeah.
But you gotta give it 5 years. So, you know,
And people need to just really grasp that concept.
we're not
right?
day trading here.
No, you're not.
We stopped doing that back in 2017.
Oh my God.
Anyways,
That
okay, I think that's about it right
Yeah.
now.
We're good.
Yeah.
Wrap it up.
Again, before we close it off, if anyone is looking for assignment deals, we got a pretty good assignment group specifically for our clients. You will get the whole picture of how much the original purchasers have paid. You will see how much the comparable is selling for, how much the rent is. So if you're in the market to buy some assignment or some good deals, we got that assignment group. Message me or Devin to get in there.
Message us quick because the good deals go like that.
Last month we did 2 in there that from the people that were in the group. So that shows that these deals, and again, these deals we don't put anything there. These are handpicked properties. That makes sense. Anyways, thanks for watching. If you
Find this useful.
click that subscribe
Or
button,
know anyone that will.
share it with them. Thank you for watching and we'll see you next time.